Hello and welcome back to Get Financially Fit with Debbie Hancock. In today's episode, I'm really looking forward to talking to Brad Ainsworth about something that business owners put off, planning their future, and not just your business future. Brad is an award-winning financial advisor and founder of Cathedral Wealth Management. Brad supports individuals and families with long-term, face-to-face financial advice, helping them not just to grow their wealth, but protect it and enjoy it. And you know how much I love that. He's also the founder of Springboard to Business, a not-for-profit helping people in their early stages of business journey to get to grips with money, marketing, and management. So whether you're growing a business, planning for retirement, or just trying to make smarter decisions with your money outside of your business, this episode is for you. Brad, welcome. Tell us a bit about what you do and how you help people.
Thanks, Debbie. I really appreciate that introduction. That was very kind. You were reeling off all the things that I do, and I was going, oh yeah, I did do that. I did set up that. So I really appreciate that. Yeah, as you said, I'm Brad Ainsworth. I'm the founding director of Cathedral Wealth Management. We're a wealth management company based in Chichester, West Sussex, and our clients tend to be sort of West Sussex, Hampshire based. Apart from those that we've done really good, successful planning, and they retire to Devon, so we tend to go down to see them. They say, well, what is it I do? In a nutshell, as a financial advisor, it's my job to make people more money, save them tax, and protect their lifestyle. That's how I sort of describe what we do. And because everyone's different, everyone's financial objectives, their financial positions are different, we have a bespoke, ongoing financial advice service that essentially means that our clients will meet with us on a regular basis for us to review their financial plans to make sure they're hitting their goals. So that's Cathedral Wealth. Springboard to Business is a not-for-profit organisation I set up about 4 years ago. I'm a really big advocate that there should be financial education in colleges, schools and universities. So Springboard to Business was born about giving financial education, and it sort of naturally progressed into me giving mentorship to those that are leaving at college and university wanting to start their own company. So I mentor 3 lads at the moment who are on their business journey.
That's so nice. And you can, I think people can see why I invited you onto the podcast, because I'm all about how you can use money to live the life you want, regularly checking in with those goals because they do change. And I believe that financial education is needed, from a younger age. I think it's crazy that we kick people out of college at 18 and expect them to get a credit card, get loans and crack on. Crazy. So why do you think so many business owners focus only on the financials inside their business and not outside it?
Yeah, really good question. And I think it goes back to who is the business owner and what is it they're trying to achieve, because I haven't come across a business owner yet that says they want to be working in their 90s or when they're at the age of 100. And indeed, a lot of business owners, in my opinion, have a skill, a set of expertise that they want to sort of, provide to other people. And they might not have necessarily the skills to run a business or manage a business. So I think, to answer your question, I think business owners get so focused on the bank account, the cash flow, how much money is in the bank, because they're worried about when the next contract might come in or if there's changes and so on and so forth, that they forget about, the purpose of why they're in business. Financial freedom is so important. And I think people talk about money in different circumstances. I've had the pleasure of listening to you, Debbie, on some of the talks that you've done, which are absolutely brilliant, by the way. You're breaking the boundaries down by getting people to talk about money. And there's still that generational gap where those that are in their 70s and 80s were brought up not talking about money, and indeed they're the ones that are going to be struggling because of things like inheritance tax. So commend what you're doing. But yeah, for a business owner, I think understanding your facts and figures is quite important. What are you saving for? What are the long-term goals?
Yeah, so I guess when you're running your own business, it's easy to become micro focused on what's the cash flow in my business, what's the profit in my business, how can I pay less corporation tax. And actually, if you think about what you want personally outside the business, you can reduce corporation tax, etc. anyway, because outside the business, if you're like, right, I want to retire when I'm this age, I want to do X, Y, Z, I want to go on these holidays, I want to help my children do it, this. Inside your business, you can then maybe set up a pension, or you can draw down the money in a certain way, or you can maybe you can employ your child. Like my child is already like, when I'm 13, Mum, I'm coming to work for you.
Right. Yeah, absolutely. I mean, I was full-time. So I've been in financial services for about 25 years. So before I set up Cathedral Wealth in 2012, I grew up in the banks giving financial advice. I use that term loosely, and I can tell you the Gene Smith story if we get time later on. But my children were young. I didn't go to a single Christmas play for my children whilst they were young. So financial freedom to me was the ability to go, do you know what? I'm going to go and watch my children at their Christmas play. And you focus on the goal. How can I achieve my goal of going to see my kids at Christmas? And it gives me 12 months to plan. And that day that I wanted to go and do that. They didn't become actors, by the way. So although the Christmas play was brilliant and I achieved that, they've gone in different directions. One of them's a chef. So
Oh, nice.
that gives you a bit of an idea. And I think as well, you talked about that, when can you retire? I think a lot of business owners, they probably don't know the answer as to when they want to retire. And in fact, I think a lot of my business owner clients, they prefer like a phased retirement. They like the idea of maybe sort of winding down.
That's me, yeah.
I take Fridays off work, for example, and that gives me Friday, Saturday, and Sunday to do other things. I'll be honest, it tends to do gardening and things around the house on the Friday. But yeah, everyone's obviously going to be different, and you need to know what your number is to be able to get to that in the first place.
Yeah, and actually, before we came on, we were talking about business owners selling and exiting their business. And I guess for a lot of business owners, they might think that their business is their retirement plan. But we know that actually, unless you put things in place and you put a plan in place, a good 3 to 5 years pre-exit, that isn't necessarily going to be the case. Your business is not going to be worth as much as you think it is. And so it's not as solid retirement plan as they potentially think it is. So do you help business owners with that?
Goodness me, this is the biggest part of my job, if I'm honest with you. A lot of our clients are business owners, so we tend to work with business owners and retired individuals. So my average client age is 56, as an example. Business owners, I'm going to be really bold here, and I'm going to tell you that business owners can exit a business without paying tax. Okay, a really bold statement, but it can happen and it can work with the right planning. And you mentioned 3 to 5 years, couldn't agree more. If you wake up one day and you've had a bad day in the office, you go, that's it, I'm off, I'm out the door. You can still retire, or you can still sell your business, but you're probably going to get less value. You're probably going to pay a bit more tax. And it's like anything in life. If you can speak to the right people, have the right people around the table and get that plan in place, it's just going to give you more financial freedom for the future.
Excellent. Yeah, that's it. It's all about, for me, business is all about planning, looking at your risk and looking at where you want to go. So what are the most important things that business owners should be thinking about when it comes to building wealth personally? So not in the business, but personally.
Yeah. So again, I think to sort of give a bit of an example on this, the first thing to bear in mind as a business owner isn't necessarily to sort of squirrel lots and lots of money away, but it's to make sure the foundations are in place first. And I'll give you an example. I'm going to go and plant a money tree, Debbie, at the bottom of your garden.
Excellent.
And every day that money tree is going to give you £1,000. So what you now need to do is go and water that plant and look after that plant. Now, how important is it for you to now look after that money plant?
Oh yeah, I'm out there. I'm out there today.
You're pruning the leaves, you're checking it's not over watered and there's not too much sunlight. Well, that money tree is actually the business owner. So the business owner is the person that brings the money through the door. So they need to be looked after and protected. Now, that won't necessarily be things like just life insurance and income protection. It could be the mental health side of things as well, to make sure, that individual is at the top of their game. But indeed, the financial protection element of what we do, the laying the foundations, is making sure that life insurance and income protection are in place. So if you're a business owner and you have a limited company, you shouldn't be paying life insurance personally. It should be going through your business. It's called a relevant life plan, and it's tax deductible. So it's a nice way of protecting you, protecting your business, protecting your financial loved ones as well. Same with income protection. It's slightly different, because income protection, you're essentially saying, if I cannot do my job, then I'm going to have a policy that's going to pay out and give me an income like what that money tree does. And indeed, although the premiums are tax deductible, if you end up claiming on that, then you pay tax on the benefit. The biggest payout that we have for income protection, if you to have a guess, what do you think the biggest payout is for a business owner on claiming income protection?
What do you mean, like size of money or
the circumstance, the reason why business owners claim on their income protection?
Oh, I don't know. I'm going to go something like they have a terminal illness, like not terminal necessarily, cancer or something.
Yeah. And do you know what? Pretty much everyone says that. It's actually depression and anxiety. That's the biggest payout for income protection. And it goes back to that sort of mental health. Funny enough, it is then terminal cancers and things that come off the back of that as well. So I think, the crux of any business plan, get the foundations in place. The next level, if I go into the next level is using your allowances. I don't know about you, but I don't like paying more tax than I need to.
I know.
quite like the idea that my tax, and we'll keep the political bit out the window, but my tax funds the NHS, it funds the police, the fire service. My office nearly burnt down 4 years ago. And we made a phone call and the fire brigade turned up, 2 ambulances turned up. I don't know why they needed two. I was the only one in the. So I know my tax goes to cover those people. And if you've ever had to go into hospital, these people really look after you. So I don't mind paying a bit of tax, but I don't want to be paying more tax than I need to. So business owners should be using their allowances. Personal allowance to get money out of the business. Is it their dividend allowances up to a certain threshold? Is it using things like pensions so that they're sort of exiting money from their company into their personal name? What we said about the future, and people don't want to be working in their 90s. So I think that's kind of the next level with business owners, and cash flow analysis, sitting down with a finance director. I cannot tell you how important that is. I have an FD as well, and the benefit of a finance director is that they will go through all your facts and figures, all your numbers, and they'll tell you what the future looks like. If you carry on this path, here's what the future looks like. If you then add financial advisors and accountants on top of that, you've got the right people around the table giving you the options that you need.
Yeah, no, definitely. I was talking to someone actually about the ISA change, the potential change in the ISA allowance, and we had conflicting views over if that should happen. But ultimately, it is about using them first, because so many people don't even use the tax wrappers available to them, and it's like it's not avoiding tax. It's like the government have them there because they are encouraging you to act in a certain way. So why not take advantage of them? So I know one area that business owners often delay is getting a pension. So can you explain how pensions can be used to benefit business owners?
Yeah, absolutely. So I think first and foremost, if you're a business owner paying corporation tax, how much does it hurt when that tax bill comes through the post? And would you like the opportunity to maybe reduce that corporation tax? And one of the ways of doing that is using a pension. Now, to be very clear, pensions have got a retirement name attached. You think of a pension as something that you access in the future when you're in your 60s, but we use pensions as a vehicle to get money from a company into a person's individual name, and it comes with tax relief. So if I was to move money from a company into a personal name, I can waive a piece of paper at the government that says that corporation tax bill that you're about to charge me, well, I've just put some money in a pension. And I know the government like that because they want us to, fund our own future. They don't want us to rely on the state. And they'll give you tax relief. And again, depending on how much your profit is, will depend on the tax relief you can claim. And that's why a lot of business owners will do that. 58% of my business funds under management is pension linked. And it's not because everyone is wanting to retire now. It's because we use it as a vehicle to save tax.
Yeah, exactly. And with say some businesses, the corporation tax between 50 and 250 is on a marginal rate, and over 250k profit, you're hitting 25% corporation tax. So why would you not, use the pension method to bring your profit levels down and save for the future? Again, the government is using tax as a way to drive behaviours they want, which is they want you to save for the future. So use it.
Completely. We absolutely love regular pension contributions. So again, most business owners, because of what we talked about cash flow and nervousness about tying money up, regular pension contributions allow you to sort of tiptoe in that and get used to a regular out going into a pension. And then in January, we'll do a tax year end health check with our clients to work out what we think their corporation tax will be, what money's in the business, and whether they can do like a lump sum top up. So if people are nervous about things like pensions and putting lump sums, you can do regulars as well.
Yeah, that makes sense, because a lot of business owners generally will go for the lump sum because they'll look at the corporation tax forecast and then go, right, let's action this. But by doing the regular amounts, you can it just becomes the norm. So I think of it when I was employed, I would just pay into my pension through my salary, and it was just the norm. And then the money that drops into your bank account is yours to spend. So you just don't even think about it.
Sorry. So the cash flow analysis I did for someone quite recently, the difference between £1,000 a month into a pension and £2,000 a month for this person was astronomical. And they were giving me lots of lists of things they wanted to do on holiday and places to go. And that list got bigger and bigger because of the pension regulars that we were talking about.
Isn't that nice? Because when we look at it, they go, what kind of retirement do you want? Do you want a comfortable one? Do you want I don't even know what the word they use is. The scrape by one, do you want a luxury one? I'm like, well, I want a luxury retirement.
Yeah, absolutely. No one wants to look at four walls when they retire.
No, exactly. And that's kind of why I talk about money so much is because I've experienced through family members, having to live on pension credit and having to, really scrape by. And I'm just like, no, this should not be the case. If advice had been given earlier, if this information was more accessible, we could change the way people live. And like, how could we not want that?
Yeah, and that isn't that the passion as to why we do what we do. I remember setting up a regular savings plan for a client many, many years ago because they wanted to go to Canada and see family. And after 12 months, they managed to go to Canada, and I got a postcard.
Nice.
And they thought of me and they said, we haven't seen our family. Thank you so much. Here's a postcard. So, there's a reason why people like us do what we do. And it's that, I call it a thrill. It is knowing that we've made people's lives better off. And I guess that sort of links in with the community stuff I do as well.
Yeah, definitely. For me, that's what it's all about. It's not about the yachts and the big houses and stuff. It's about actually what do people want and the real heart of what money can provide. So what do you see as the difference between those who build lasting wealth and those who don't? What are the habits, approaches and mindsets you see?
You've nailed it. Absolutely nailed it. It's habits. I think building habits when you're young is important. And we talked about why the financial education in schools and colleges work. But I think, again, depending on the individual, if you're a person on your own, in a couple or in a family, I think whoever your sort of close people are, children, for example, have a financial goal together. I do it with my children. My children love to go on holiday, but I don't like paying for them all the time. We'll have a plan and we'll put something in. Sometimes we make it competitive, sometimes we don't, because people will learn different levels. But I think building habits and starting early is simple. You don't even have to be thinking millions or thousands. If you were to put £1 a day, or if you were to have one less coffee a day, and if you were to put that money into a pot that has no bank card and no internet access, and you forgot about it for 10 years, don't, by the way, because you want to make sure the interest grows. But the example being, if you forgot it was even there, that's the habit. And then again, reviewing that. Well, actually, if I did £5 a day, maybe I can do £10 a day. Okay, actually £10 a day was too much. Maybe I'll do £7.50 a day. It doesn't have to be telephone numbers, but that compound element of saving and building habit doesn't just install for you, but it does for your children. So when they grow up, they'll hopefully do the same with their children. There's also, I have something called the Millie Effect. I don't know if it's appropriate to talk about this, which essentially is an acronym as to why people build wealth and how people that build wealth successfully. So clearly, we deal with lots of different clients from different backgrounds, different wealth levels, but the ones most successful are the ones that have these as a habit. And I'll very quickly go through this, if I may. Millie, Millie. And Millie, it's actually Millie Luxford, who used to be a Spirit FM radio presenter. And she asked me on and said, could you do a financial hints and tips? So I named it after her. So I'll go through it very quickly. The M for mother in Millie is monitor your bank statements. So whether it's once a month, 6 months, or every 12 months, go through your bank statements, see how many Netflix accounts you've got, see how many subscriptions you've got to Amazon and Prime and things that maybe you don't use, and just monitor your spending. How many curries did you have? How many times did you go away? Is there things that you can do? The I in Millie is investigate your interest rates. So again, look at the interest on your savings, your interest on your mortgage, your credit card. Can you move credit cards in balance transfers? Can you remortgage to get rid of loans? Or indeed, are you paying tax on your savings? Is there a better interest that maybe you pay less tax? The L, or the first L for Millie, is live without. And this is all about impulse buying. And I love this one because if I want to buy something, I'll go online and I'll stick it in my shopping basket and I'll forget about it for 30 days. And that stops me impulse buying. And if in 30 days time, I really still want it, I'll then buy it. But interestingly, a lot of the online retailers might send you a voucher and say, that thing in your shopping basket, do you want it?
They chase you up, don't they?
Which is very kind. The other L is look for an advisor, because you don't know what you don't know. And I think what's important with anything to do with finance and money is to have an expert, someone that you trust, someone that you believe in, because you don't know the questions to ask, but they do. And I think having that relationship with someone is quite important. And the last thing with the why is you best. People know where their shortcomings are, where their strengths are. And if you're regularly doing these things, do you get on with your bank? If not, switch your bank. You can get £75 at the moment with a bank switch. Do you get on with your utility provider? No, maybe I'll change to another tariff. Do you get on with your mobile? You can see where it's going. You know best. And I think if you follow those on a regular basis, those habits will help build successful wealth.
Yeah, no, I really like Millie actually, because it covers everything that I talk about and recommendations that I make to my clients. So I'm always getting them to review their bank statements. Like, well, I had a conversation the other day. I was doing a webinar with a gambling recovery charity, and I was talking about some of these things. And the guy at the end said, it's so useful. I've got notes. I'm going to go and action these things now. You know, he's impulsive, like kind of goes with it. And he was like, some of it sounds so simple, but sometimes the best things are the simple things. So it's checking those bank statements. Like, we actually got rid of Amazon Prime over a year ago now. I can't even remember, 18 months ago. And you think, oh, it's only £8 a month. Keep Amazon Prime. And I'm like, no, let's just get rid of it and see how we get on. Actually, our Amazon spending has gone down. And when Clarkson Farm come back on, we'll pay for a month.
Pay for a month.
Cancel it again. And we've done the same with Netflix, because we like, oh, what's it called? Slow Horses. So when Slow Horses comes on, we'll sign up to Netflix and then we'll cancel it.
My kids have so many different subscriptions, so I cancel them. And if they don't shout and scream at me, then I know they don't use it. But I cancelled something oh goodness me, I think it was an online channel that they were watching TV series, and there was absolutely uproar because they were on the last series or the last episode. It's like, Dad, we really want to do this. I said, that's absolutely fine. If you go and empty the dishwasher and feed the dogs and do this, I'll turn it back on again. So you can sort of do extras with it.
Very good. Yeah. And I have been looking at my interest rates, because, you know, when you come to the end of like special bonus periods, and I have actually been looking at where I store my shares and funds and assessing how much fees I'm paying, because when I started it was like, I just want to get started, so I'm just going to take quick action. And now I'm like, oh, actually the fees are a little bit steep, so I'm looking at what I'm doing with that. And you know, I'm a money person, you're a money person, we don't get it right all the time. It's about taking action and then correcting over time. And I was going to ask about protection, but we've spoken about income protection and life insurance. And it's because I done my will about 5 years ago, but I never did my lasting power of attorney.
Oh, okay.
So on Monday, I actually sent off both of my lasting power of attorneys. So they're done. I'm 38 years old and I've got them in place. And loads of people must not have them in place.
It's interesting because so when a new client comes to us, we put together a financial report that outlines their financial future and risks, and we obviously make recommendations. And on page 1, it says wills and power of attorney. And the amount of people that don't have wills or indeed power of attorney is quite scary. I have cases, and I've got one currently, where 2 people that are married had each other as their power of attorney and nobody extra. They've both become ill at the same time. They're both in care. And unfortunately, they don't have anybody else. Now, these were new clients. Obviously, I'd have told them about the additional, attorneys had we been with them a longer time. Nobody can do anything. No one can transact on their banks. No one can give them medication. No one can offer them any facilities. So they're a bit of no man's land. We've had to go to a solicitor firm who then approaches the courts at the Court of Protection to get a license to be able to give help and advice. Now, obviously, the care homes aren't getting paid. They're trying to kick these people out into hospitals. They've ended up in different care homes. So they've been married 40 plus years. They're now in different environments. And it's heartbreaking. So, a power of attorney is probably more important than a will.
Yeah, I've heard that actually.
Is still around, so, and it's not particularly too onerous. I mean, obviously, I would suggest having a look at the online HMRC portal. It's quite straightforward, but there are professionals that can write things up as well. Have you seen the charitable?
Sorry, what?
Yeah, so if you think someone like St Wilfrid's, every now and then they'll have a will writing week.
Yes.
So if you make a donation, you can get a will, so they're always quite handy.
It's usually like November time, isn't it? I think that a lot of the charities come together around that time to do that. So with my lasting power of attorney, I've got my partner. We're not married. I know people go on tax rules, but anyway, so lasting power of attorney is him, and then I've actually got my dad as secondary, and then obviously depending on what happens, I will have to adjust that over time. But yeah, like it's just one of those things that people don't want to do because it sounds scary, and like we don't want to think about that point in life. But actually, imagine, like we've just said, being in different homes, like that's not what we want. So I know that you're passionate about balance. Can you talk to us about the importance of planning for the future, but also enjoying life now? So we've kind of talked about the future a bit in terms of pensions, lasting power of attorneys, etc. But also enjoying life now.
Yeah, absolutely. I think that I would ask people this question: what are you saving for? What is important in your life? I mentioned about my children, going to watch their Christmas plays. Now they're a bit older, we enjoy, holidays together. So having a work-life balance and planning for now is just as important as planning for the future. Unfortunately, people can pass away prematurely. So, it's sad because I meet couples where, you know, one of them's a widow, for example, and they say, well, we were planning this trip to overseas. We were planning on this, you know, holiday of a lifetime, and it never happened because they became ill. And I will sit with people that are, I say, my average client age is 56, and I'll speak to people now and say, well, you want to go on that cruise? What's stopping you going now? Why are you waiting for 10 years? Because actually, inflation means in 10 years it'll be more expensive. So it probably makes financial sense to do it now. And if you've cash flowed with an expert and you can see it's affordable, why wouldn't you fulfill your dreams? And my wife and I, we wanted to go to Thailand for so long. And even I'm sat here as an expert talking about it, but we kind of put it off and off and off because our children were quite young.
Mhm.
And in fact, I had a conversation with my niece. I said, and she's in her mid-20s. I said, look, I really want to just go to Thailand. She goes, I'll go to your house. I've got a pool in my house. So I think she wanted her and her kids to enjoy the pool.
Oh.
And then we went to Thailand, and that was a dream that we had. I think, yeah, you need to know your onions. You need to know your facts and figures, and ask yourself, what are you saving for, and when would you like to do that?
Yeah, no, definitely. It is so sad when you see things happen. So like my nan always wanted to go to Canada, and by the time she went to Canada, she was too unwell to really enjoy it. And we're going to Canada this year, and I'm just like, you know, it's more important to me now. There's more, it's like, yes, we've got to go and do this, and we've got to go and see these things. And do we want to go and do the glacier walk, and do we want to do the gondolas? And it's like it's costing us a lot of money, so let's just go and do all the stuff and make the most of it, because yeah, like we don't want to be doom and gloom, but we don't know what's going to happen, do we? So we're here to enjoy and experience life. And my son keeps talking to me about, can we get a swimming pool in the garden? I'm like, mate, there's no space.
Yeah, but don't, for financial reasons. Definitely don't get a heated one. It's just not. But then I guess going back to the sort of mental health side of things, when we bought our house, we did it just as stamp duty was being changed because it was COVID time.
Right.
We made a big stamp duty savings. Now I could have stuck that in a pension. Instead, we decided to buy a pool. So, you know, we wanted it, and it works because I can have a really stressful week and jump in it. It helps with the exercise. I'm trying to make excuses here, Debbie, but
It's what we all do, isn't it? We make our decisions sound logical, and they're emotional decisions. But that must mean that you enjoy a bit of cold water swimming too, like I do. So, you know, get out in the sea, embrace the January cold, mental health benefits. No?
I'll be completely honest. So it's heated. I mean, it can go to sauna level. So it's actually a hydro pool rather than a sort of concrete one. And you can swim against the jets, which is pretty good. But
yeah,
tend to have it up higher than just the swimming temperature.
Okay. So you founded Springboard to Business too. Why was it so important for you to support people at the start of their business journey with financial knowledge?
Yeah, great question. I just think that I looking at my children, so my children are 22, 18 and 16 now. And obviously they know what I do for a living, but from a financial education perspective, they didn't have a clue. Student accounts, you know, what's the best student account? How do I get a mortgage? How do I build up credit, you know, to be able to afford things? There was just none of that there. And I think my passion, you know, we mentioned about changing people's lives, getting postcards and, you know, supporting people when they need it. I thought, well, why not? Why not go into schools and colleges and universities and have these chats? And it opened a massive can of worms, if I'm honest with you, because I was going in asking these questions, and then lots and lots of people were contacting me. So I started Springboard to Business to put a bit more of a structure around financial education. But also, I think it's really important people understand this. Just going to university and going into an employed role isn't the end all and all for life. Starting your own thing is just as viable in the UK as it is going into employment. And I would argue the question as well is that when's the best time to start a business when you don't have kids, you don't have a mortgage? So if you've got an idea, let's you know, nurture that idea, and there's lots of grants you can get and so on and so forth. Unfortunately, because it's such a vast area, I can only mentor 3 people at the moment. So every year I do I'll take on 3 people, and we'll do money, marketing and management, the 3 M's, because we think that's the 3 parts of building a successful business. Obviously there's a little bit more to it. And then we'll do a Dragon's Den project. So I have about 12 or 13 dragons, are just people that like the idea of helping the next generation. We'll have a fund, they'll pitch and ask for money, and then that helps them start their businesses as well. So that's where sort of Springboard came from.
Oh, very nice. Yeah, see, when I started my business, my son was 4. We just tripled our mortgage, and then not long after COVID hit. So it wasn't the best time risk-wise, but you know, It worked out okay. So yeah, to summarize, what would you say to business owners listening today who've never really done any personal financial planning, and where should they start? What's a sort of simple step they can take if they're feeling a bit overwhelmed?
Yeah, I would say two very quick points. Number one, the Millie Effect. That can have surprising difference on people's finances, and people do find, hundreds, if not thousands of pounds of savings as a result of that. Number two is you don't know what you don't know. There are lots of financial advisor companies out there that are willing to sit down with people. They tend to offer discovery chats, no obligation introductions, that type of thing, just to get a bit of a feel as to what's going on. People pay the experts for a reason. For example, if I was to build a house, I could probably do lots of research and become a bricklayer and a plumber and electrician. It's just impossible. Financial advisors are multi-skilled. They are your plumbers, they are your builders, they are your electricians. So finding a trusted one can bring so much value. You pay for the privilege, and on average, there'd be an annual management fee somewhere between 1% and 2% that you would charge as a result of taking financial advice. But clearly, the benefits that they bring, the mental health, stability, statistically, 97% of people who have a financial advisor have no money stresses in terms of mental well-being because they've got someone they can rely on. So those would be the two things, Millie, and then go and find an expert.
Thank you, Brad. So actually, off the back of that, I was listening to a podcast yesterday and talking about investment in the stock market and stuff. And the bloke was saying that a lot of people feel they're not wealthy enough to have a financial advisor. It's almost like it's embarrassing to say, I'm rich enough to have a financial advisor. Do you see that? Is that a block for people?
It is. It really is. Yeah. Because wealth management can mean different to different people. Wealth management, we don't care if it's £5 or £50 million. I'll be honest, clients that have got £30 million plus, they don't need financial advisors. They need lawyers, because it brings up a whole different can of worms. But again, it's that wealth accumulation. And in fact, some of our clients that could be perceived as having lower investments are our biggest advocates. So they're the people that will go, you need to have a chat with mum, you need to have a chat with dad. So we never measure people's service based on the amount of money we look after. I've got a 97% servicing record for a reason, and not everyone will have millions of pounds invested with us. For those that are skeptical, the other 3% are people that we couldn't get in for a variety of reasons. They could be out of the country, they could be ill. And then we would turn off their fees, so they're not obviously being charged for a service they're not getting, just for those that are skeptical.
Thanks, Brad. Thank you so much. It was really brilliant to talk to you, and it's so needed. I think so many people are going to go away thinking, I really need to think about how I'm managing my money personally and not just in my business. How best can people get in contact with you?
Yeah, if you just type in Brad Ainsworth on Google or Cathedral Wealth Management, there's a plethora of things that are up there. I think if those are wanting to look for a financial advisor, have a look at Vouched For, which is our industry's version of Checker Trade. And you can type in your town, county, and it will give you a list of people that are local to you, and it scores them based on client reviews.
Excellent. So I'll pop the links to Brad's website, his LinkedIn, and Springboard to Business in the show notes too. Thank you for listening. And if you found today's episode helpful, make sure you follow the show and share it with a business owner friend who needs to hear it. And also, if you would like to give me a review, then obviously do go ahead and do that. And see you in the next one. Bye. Bye, Brad.
Bye.